So it looks like we've got some developing news in the world of SCHD. For fans of the Schwab US Dividend Equity ETF, we're apparently getting two brand new ETFs that'll either hold SCHD or they'll mirror SCHD's holdings. And what they're going to do is provide a significantly higher dividend yield, basically giving SCHD a yield boost. It looks like one of these funds was announced last month, and then a different company announced another SCHD-based fund about a week ago. All of this information can be found on the SEC's website, since neither company has a fund page yet. So let's go ahead and look at these two upcoming ETFs and see if they have any potential. The first one is called the YieldMax SCHD Double Div ETF. This information is coming from the Title Trust 2's Form N-1A that was filed with the SEC in July. It doesn't have all the information available yet, there's no ticker symbol, and there's no expense ratio as of the making of this video. Although it is pretty typical for YieldMax to charge an expense ratio of a little under 1% or so. But looking at this document, we can get a good understanding of what strategy this ETF is going to use. Scrolling down to Principal Investing Strategies, it says the following. The fund is an actively managed exchange-traded fund that seeks income and capital appreciation. The fund strategy involves 1. Investing in shares of the Schwab US Dividend Equity ETF, SCHD, an exchange-traded fund that seeks to track the performance of the Dow Jones US Dividend 100 Index. And 2. Generating income through an options portfolio by collecting premiums from selling or writing options on select underlying securities held by SCHD or highly correlated securities and SCHD itself. Additionally, the fund will maintain an allocation to cash or U.S. Treasuries, generally between 0% and 20% of total assets. So based upon this description, it sounds like it's actually going to own SCHD itself. This makes it unlike the vast majority of funds that are already out by YieldMax. This fund provider is most well known for using synthetic covered calls on holdings, which doesn't translate into the ETFs actually holding the underlying securities. All they try to do is replicate the price movements of those stocks and those ETFs that they hold. It's also going to hold treasuries, which a lot of these options-based ETFs do. It's just a place to store cash for their option strategy and a higher yielding place to store cash since treasuries are still yielding over 4%. Continuing down in this filing to the option strategy section, it gives more information on what we can expect in regards to a dividend yield. It says the fund seeks to generate income through an actively managed options overlay strategy that targets an annualized distribution level of approximately double the annualized distribution yield of SCHD. For example, if SCHD's annualized distribution yield at the time of the fund's distribution is 4%, the fund aims to make cash distributions equivalent to an annualized distribution rate of approximately 8%. With roughly half coming from SCHD's dividends and the fund's short-term cash investments like U.S. Treasuries and money market vehicles, and the other half being generated through its option strategy. So as the name would suggest, this double div ETF is going to use options to basically double SCHD's dividend yield. So that would make it a little under 8% as of the making of this video. So it seems like an interesting strategy. YieldMax is very well known for their 80% yielding synthetic funds, and here they'll be with an 8% yielding fund. It's very unlike their other funds, and I doubt it'll attract the same audience as people who are into MISTI and ULTY. But I think it's pretty obvious that they're just trying to cash in on how popular SCHD is. So that's the YieldMax fund that's coming out. The second ETF that was just announced not too long ago is the Defiance SCHD Target 15 Income ETF. Just like the previous fund, there's no ticker symbol or expense information available just yet. According to this fund's filing, it's an actively managed exchange-traded fund that seeks income and capital appreciation. The fund strategy involves two components. First, investing directly in the underlying holdings of the Schwab US Dividend Equity ETF, or SCHD itself, and generating option premium income through an options portfolio. It will do this by collecting premiums from selling or writing options on the underlying holdings of SCHD or highly correlated securities or SCHD itself. The fund's options portfolio seeks a target annual income distribution level of 15%. So this fund is pretty similar to some of their other ETFs offered by Defiance. They have several of these target income ETFs, including their S&P 500 Income Target ETF, SPYT, and their NASDAQ 100 Income Target ETF, which is QQQT. These two ETFs offer a target yield of 20%, so the SCHD fund is going with a more modest 15%. The document also says that the 15% yield is not a guarantee, nor does it represent a 15% yield or a 15% total return. Additionally, to meet the annual target, the fund may make distributions that are classified as return of capital for tax purposes. In order to get that high of a yield using options, it looks like it'll function like SPYT and QQQT. They'll sell at the money or near the money call spreads to retain upside growth potential and aim for their target annual income level of 20%. My concern right away is if they are using a lot of return of capital, I'm curious where the source of that is going to be coming from. This fund could be basically eating itself over time just to ensure it can meet that 15% target yield if it's not achieving that using options. I should also mention that both of these funds intend to pay distributions monthly and not weekly like a lot of their other funds. So those are the two SCHD-based income ETFs that are apparently coming soon. There's a couple of conclusions that we can make based upon the strategies outlined in their SEC documents. First off, I don't have high expectations for the Defiance ETF. I know the 15% yield sounds really enticing, but we can look to this company's other target income funds. Both ETFs really struggle to maintain their share prices. We can see, for example, that the S&P 500 is currently up 8.14% this year, but the fixed income fund that uses options on this index, SPYT, is down 6.13%. These ETFs experience the same downside as their respective index, but the upside is extremely limited, more so than most covered call funds. Sure, that 20% yield makes up for some of those losses, but considering the market has been soaring this year, what will SPYT, or this new SCHD fund for that matter, look like in terms of share price performance in just a few years? The amount of income that's being generated from these options-based ETFs also depends on the volatility of whatever index or holding they're using their strategy on. SCHD, by nature, is a much less volatile investment than the market. So ultimately, I'm just really concerned about share price erosion over the long term with this fund. Also, as the share price falls on these ETFs, their dividends go down with it. I love the idea of an ETF offering a fixed yield, but what Defiance is doing with their other funds, I'm not convinced will work out. With the YieldMax ETF, I do think this one is a lot more attractive than Defiance's fund, but I still have a couple of concerns about it. Although it should deliver dividend growth, which SCHD is most famous for, we also know that upside is going to be capped because of its covered call strategy. We all know SCHD has had a lackluster year in 2025 in terms of share price growth. And although it's still too early to speculate too much until we actually see how it performs, I'm concerned about share price growth with this fund too. Plus, consider alternative investments that exist. If this covered call fund yields a little under 8% and we don't yet know how it'll perform, why should we consider it over an ETF like SPYI, or even something like QDVO? All we can do is just wait and see until both of these funds are launched. But let me know what you guys think. Do you think any of them are worth considering at all, or do you think that they're not appealing? I don't believe either fund strategy captures why people invest in SCHD in the first place. But let me know your thoughts in the comments. And with that being said, that's going to wrap up today's video. If you'd like to connect with me and see what's inside of my own high-yielding dividend portfolio, then feel free to check me out over on Patreon. You'll be notified when I make trades, and you'll get access to our Discord with other high-yielding investors. Thanks again for watching. Please be sure to like this video and subscribe if you want more high-yielding investment content. Thanks again for watching, and I hope you all have a great day.